Welcome to today's market report. European stock markets are seen edging higher at the open on Tuesday, rallying after Monday's sharp losses, but the growing incidence of coronavirus cases continues to cast a shadow over the region. DAX futures contract traded 0.3% higher, CAC 40 climbed 0.2% higher, FTSE 100 rose 0.2%. Wall Street closed substantially lower on Monday, with the Dow Jones falling 2.3% overnight, S&P losing 1.9%, while Nasdaq dropped 1.6%. The number of COVID-19 cases continued its incessant rise, with over 43.4 million cases globally as of 27th of October, according to the Johns Hopkins University data. Europe has been hard hit by the second wave of the virus, with France, for example, on Monday seeing the highest number of coronavirus patients going into hospital since April. This has resulted in the number of countries imposing new restrictions. Spain has announced a state of emergency for 6 months, curtailing economic activity. This increases expectations of action by the European Central Bank when its governing council meets on Thursday, although the consensus view is that the bank will only announce fresh stimulus at its December meeting. An additional source of concern for the markets is the fading prospects of a new US coronavirus relief package. House Speaker Nancy Pelosi said on Monday that she remained hopeful an agreement can be reached before the 3rd of November election, but this looks increasingly unlikely. In corporate news, HSBC is likely to be in the spotlight after the banking giant reported third quarter pre-tax profit of $3.1 billion, a smaller than expected 35% drop from a year earlier. The UK-based Asian-focused bank also signalled a quick return to dividend payments. Rival Banco Santander also beat expectations, recording third quarter net profit of 1.75 billion euros, a strong bonus after posting the first loss in its 163-year history in the second quarter. Oil prices edged higher on Tuesday, rebounding to a degree after Monday's hefty losses, but the surge in coronavirus cases in the US and Europe means sentiment remains gloomy. Crude future traded 1.1% higher at $38.98 a barrel. Brent rose 1.1% to $41.27 a barrel. Gold futures rose 0.2% to $1,909.80 per ounce. On the FX front, GBP USD clings to modest gains near session tops around 130.35 to 40 region. The pair continued showing some resilience below the key 130 psychological mark or 200-hour SMA and gained some positive traction on Tuesday. The GBP USD pair for now seems to have snapped 3 consecutive days of the losing streak and stalled its recent pullback from the 131.75 region amid a mildly softer tone surrounding the US dollar. The greenback struggled to preserve its early gains despite growing market worries about the continuous surge in new coronavirus cases and fears of stricter lockdown measures, which could prove detrimental for the already fragile global economic recovery. The uncertain US politician situation seemed to be the only factor that kept the US dollar bulls on the defensive. Meanwhile, the fact that the EU's chief negotiator Michel Barnier delayed his return to Brussels and is expected to remain in the UK until Wednesday has boosted hopes for a last-minute Brexit deal. Nevertheless, the incoming Brexit-related headlines will continue to play a key role in influencing the GBP price dynamics and influencing the cable. According to the UOB Group, the next support for the pair is at 129.60, which is unlikely to come into the picture in short run. Resistance is at 130.50, followed by 130.75. In the next 1 to 3 weeks, they highlighted that upward momentum is beginning to ease and added GBP has to move and stay above 131.20 within this 1 to 2 days, or the odds for the further GBP strength could diminish quickly. Euro-dollar supported above 118 amid US dollar pullback. The dollar is dragged down by the weakness in the Treasury yields, especially after the benchmark 10-year Treasury yield dropped below the key 0.8% level. The overall market sentiment remains weighed down by the rapidly rising coronavirus cases globally, with major European economies contemplating national lockdowns once again, as they struggle to contain the second wave of the virus. According to the UOB Group, downward momentum has improved a tad, and the bias for today is tilted to the downside. That said, 117.70 is a strong support and may not be easy to break. Minor support is at 117.90, resistance is at 118.35, followed by 118.60. The dollar index was down 0.1% at 92.985. This is today's market news. Thanks for listening. We'll see you next time.